Yo.
Our reality of a Bankrate survey, a full 50% of those who apply for a loan since March of 2022 have been denied for that loan. Here's the deal. Most of those who were denied were trying to pull equity from their house that they already own. They were denied on cash-out refinances and they were denied on HELOCs. They are the winter's foreclosures that are going to happen in the coming months. Inventory for you agents, but more on this.
82% who have been denied say that the rejection negatively impacted their finances. Because being broke, they couldn't pay their credit card, their car, or even their mortgage. To access the credit they need, nearly 1 in 4 rejected applicants, 23%, pursued alternative financing such as cash advances or payday loans, which come at even higher interest rates, up to 650% higher.
The utter level of desperation taking place right now in our country with our mortgages and the inability to get cash out is absolutely unfathomable. Can you imagine owning a house with a few $100,000 in equity in it? Now your finances are shot, your income is down, your debt is untenable, and you have to go to a dang payday lender because you can't get a loan. That, my loan officer friends, is sheer desperation. Now, imagine if you had gotten to them 6 months ago before it was too late. The takeaway is this. This scenario that I just outlined is playing out right before our eyes. Now, a call to your database is in order to help with their genuine disorder. The question really is, are you going to make that call?
I'd like you to take a look at this graph and picture. It goes through 2002, but shows very clearly and drastically the median sales price for a home and the median income.
Now, it's something that we all know, but could you have ever imagined that it would have ever been so unbelievably pronounced? What's scary is the number by today's standards is even worse. After all, this only goes to 2002. Unaffordability is now the biggest issue facing our country. According to Redfin, and as you can see from this graph, in 2021, the average housing payment was about $1,600 a month. In 2024, just 3 short years later, that same payment as of May 5th of 2024 is $2,894. And that's based on an average interest rate of 7.22%. In other words, in 3 short years, the average payment has ballooned by over $1,200, or to put it even another way, our collective median housing expense has gone up an unsustainable 25% in those 3 short years. The seams are busting right now. The dam has fallen. The plane has crashed. The train is coming off the rails. Helter skelter, a 25% increase in housing in 3 years, and there is no relief, my friends, in sight. That is, of course, without you.
U.S. consumers expect mortgage rates to approach double digits over the next 3 years, according to a study by the New York Federal Reserve. Households have a gloomy view of mortgage rates. Consumers, on average, said that over the next year, they expect the 30-year mortgage rates to rise to 8.7% and in 3 years to 9.7%, quote, both of which are series highs. While another Fed survey said consumer expectations are for even higher inflation in the years to come.
Last year, we were telling you that homeowners wanted to tap their equity because we are consumers at our core and we just like to spend our money. The narrative, my friends, has changed. Now we're telling you to reach out to your clients because they have to tap their equity in order to stay above water. The options, my friends, are falling off the table. Today's show is for the loan officer and the realtor out there that actually cares about their clients. You need to reach out to them today because their behavior has moved over into the realm of desperation as their mindset about the market has continued to deteriorate. Their finances are bad and their outlook is even worse. They desperately need to tap that equity, and we don't want them going to payday loans, and you're the person who can help them out. Listen, if you're a realtor and you want help with an outreach campaign, reach out to us and we'll help you out. Do it to help your clients, but I want you to understand that all of those conversations that you'll be having, that you need to have, that you should have, are going to create listing opportunities for you, because that's the other option that's on the table. I hope this helps.